Let's take a look at sectors, folks, and get those old pictures out of the way. I dye my hair gray now, those of you who are wondering about that, to make me look more distinguished. Nice start, 4-1, advancing the declining stocks here. Materials, we got Dow, DuPont's moving all the Dow material stocks up. Semis are up. NXP had good earnings numbers. CAT and Boeing helping in the industrials. Healthcare is also doing really well here. November trends, hey, this is a really good month historically. We love the seasonal flow in November. It's the second best month of the year, average up 1.5%. It's been up 45 of the last 67 years. That's 2/3 of the time. It starts that best 6 months of the year period that we always talk about. And this is the most important thing. The midterm election years, it's invariably up in the fourth quarter since World War II. That's a winning combination. Very strong flows. Also strong, we've been talking about buybacks increasing. They are. It's going to be a record year. $1 trillion in buybacks will be announced this year. That's going to be helping overall for buybacks that we've seen here. So earnings here. Here's my takeaways. We're 3/4 of the way through here. You heard the guys talking about the cost pressures, whether tariffs, whether commodities, whether labor costs. And Jim's right. It's who's eating it and who's not. So some are raising prices, some are not. But we also hear a lot of talk about modifying the supply chain, moving things around. We hear more talk about productivity improvements. Companies are trying to deal with this. And the issue is whether the margins can be maintained. My sense is they're doing a pretty good job maintaining margins. They're roughly 10% in the S&P 500, not slipping dramatically. One thing to watch, this will be an issue for the next few quarters, debt reduction. That could be a competition for share buybacks going forward. I'll keep an eye on all of that. Meantime, speaking of buybacks, just want to point out a number of companies doing some very big buybacks today. Dow, DuPont announcing one. BHP built in a huge buyback and a special dividend. Allstate, a big buyback. Voya, S&P Global. There's a whole bunch of them going on here. But the big one, the king of buybacks, we'll hear more from tonight, and that's Apple. Nobody buys more shares back than Apple. They purchased $43.5 billion the first 6 months. You watch, they're going to announce they bought another $25 billion back in the third quarter. They might buy back $100 billion this year, possibly. That's an amazing number. They have reduced their share count every year for the last 5 years, 26% lower share count. That is an amazing feat, and it's been a significant factor in why their earnings have been strong. It's not the only factor, but it's been a very significant factor. Finally, we got out of October. We're getting some preliminary numbers on flows, fund flows. I'm looking now specifically at ETFs. I'll show you bond mutual funds later. But you see there's some outflows from the bond funds. The big one is AGG. That's the biggest one out there, $2.6 billion. That's about 5%. The investment grade LQD, that's the second biggest one, $2 billion. High yield and treasury also. Finally, just on stock flows, the biggest one of all, the SPY, that had some outflows, but the two more boring ones that are considered investment grade, S&P 500s, there you go. Just inflows. Bit of a surprise on that. Talk more later on. Carl, back to you.